and gentlemen, and a warm welcome in the name of the whole team to our Capital Markets Day 2024. We are very happy and appreciate that you took your time to come here, and we are very glad about your interest into our investment opportunity. The opportunity is very easy to describe. What we are going to offer you is the story of a mid-sized European insurance dividend stock, a company which is going to offer you in the next couple of years roughly 5% growth on the top line, CAGR. We offer you something like a 6% growth on the bottom line as far as EPS is concerned. We offer you a constant dividend payout ratio of 50 to 60% in the next couple of years, and a progressive dividend. And this means a dividend which is growing year by year in absolute terms. A company, as you know, led by a very ambitious and also experienced management. We propose a kind of agenda for you which has 6 chapters. I will give you a very brief introduction about our company. Afterwards, Kurt Svoboda, our CFO, CRO, provide you the most important details around the financials, risk, KPIs. And then we got a very interesting deep dive into the 2 engines of our company, meaning our 2 markets. We start with Wolfgang Kindl. Wolfgang is the architect of UNIQA in Eastern Europe, an incredibly growing economy and region insurance markets. And afterwards, after a break, you will get again Kurt here on the stage, giving you a detailed impact and introduction on Austria. I have to apologize, my colleague Peter Hummer, who runs the Austrian business. Peter could not come due to sickness leave, so this is why Kurt takes over this chapter. Afterwards, a deep dive in health and life insurance, so in personal lines. Why? René Knapp, our colleague being responsible for this, has this important field for growth under his control, under his responsibility, beside asset management. And this needs your special attention because we see, especially in times of quite critical demographic situations, a huge catch-up potential in life, but very strong, as you know, is our position in the health business in Austria, where we have a market position of 44% market share, with incredible potential for growth, especially in the ecosystem of health. Short summary from my side at the end, and then we have a lot of time for a hopefully very vivid and agile Q&A session. So, who we are. Most of you know us already, but not all of you, so let me give you a brief introduction about UNIQA itself. It's a company which is standing, just as me here today, on 2 feet. The 1 feet is represented by Austria. This is the company colored here in blue in the middle. In Austria, we are present for more than 200 years. So the roots of our company are dating back to the year 1811, which is more than 200 years of experience in the insurance industry. And something like 25 years ago, we decided to move towards the east. And starting from Czech Republic and Hungary and Croatia, step by step, we moved further on to the east of this part of Europe, being present today in something like 17 countries. Here it needs 2 remarks. First, as you know, we left in Q3 Russia. We had a very attractive, a very profitable but small operation in Russia. But immediately after the start of the Russian aggression towards Ukraine, this means in February 2022, we decided to leave the country, to exit Russia, and we happily could inform you that in Q3 we managed really to exit finally our business there. And second, you might have heard, and this is here colored in gray, that a couple of weeks ago we decided to leave also Albania, Kosovo and North Macedonia on the West Balkans. Not because those companies haven't been profitable, they really delivered reasonable returns, but the thing is just the significance of the market basically deteriorated. We have now a focus on the larger markets in Eastern Europe, and those small nitty-gritty markets also deserve management attention. This is why we decided to exit there. And then you see also on the left part of this slide that we have gray-colored Switzerland. We are not there as primary insurance company, but we have there our reinsurance operation in Zurich. And this operation has significant importance because when it's later on about who delivers which dividends to the group and later on to you, you will see that the importance of our reinsurance operation in Zurich is increasing. And this is the reason why we have to talk afterwards also about the reinsurance operation. So what this means, in future, not 17 countries, but if you deduct Albania, North Macedonia, Kosovo, we talk about 14 countries, but that's it, and there are no further plans to exit any other countries. Top line wise, a company between 7 and 8 billion euro, profit before tax north of 400 million euro in the year 2023. And this is after Boris, but Kurt will come back to it later, also the level what you can expect from us in this year 2024. We are very happy that we have the privilege to serve something like 17 million customers already, between 16 and 17, but we're moving already, very happy and proud about this, towards 17. Interesting that at least 13 million out of those are in Eastern Europe. And this shows also like how the power inside of UNIQA is shifting. This shows how more the relevance of the very dynamic growing markets in Eastern Europe, how this dynamic is really growing and taking over. 15,500 employees, I'll come back to it in a second, because also here a lot of new talents and skills which we have in our group. If you ask me what is maybe the most interesting characteristics of UNIQA, I would say it's our diversification. I said before a couple of minutes that we have 2 legs. You even could say we have 3 or 4 legs because we are super diversified. If you look to the right part of this slide, you see how diversified we are as far as regions are concerned. Roughly 60% of our overall premium, 61%, is generated in Austria, but already 40% tendency, very strong growing in Eastern Europe. Second, if you look to the product groups on the very right part of this slide, you see the domination of the P&C business, currently standing for more than 40% of our revenues. But you see also life stands for roughly 22%, and health, of course, is increasing because, as I mentioned, we have this dominant position in Austria. In all our markets, basically, the public healthcare systems are under pressure, and this means there is a strong demand for private healthcare solutions, and this is why we keep on investing and expanding in this section. Further down, on the right part of this slide, you see how diversified we are when it's about distribution power. Dominating is our tight agent network, standing for 44% of our 45% of our total premium, followed by the broker, by the bank, digital, and other solutions. Now, if I may summarize, if I had to summarize what are the 6 main characteristics underlining this kind of diversification, I would start on the left top part of the slide saying, okay, this company is number 2 in its home market, Austria, and on average number 5 in the strongly growing, and as far as insurance is concerned, completely underdeveloped Eastern European region. Second, altogether, after the exit of Russia, we address a potential market size of roughly 160 million people. And if you look back where we came from, 9 million people in Austria, 160 altogether, this also underlines the growth potential of this group. Number 3, the brand. This is a company which got a very clear one brand strategy. And all of you who know Austria know that UNIQA is by far the most attractive brand and the best known brand in the insurance industry in Austria, having a difference of roughly 20 percentage points to our peers and the next competitor. Just in one case, we use another brand, and this is when it's about cooperation, and this brings me to item number 4 here, preferred partnership with Raiffeisen. When we operate in Austria on the banking industry side, we use the brand Raiffeisen Insurance because this increases more the credibility on the side of the bank's customers. Having said Raiffeisen, so you know Raiffeisen, I'll take it in a second, is one of our shareholders, standing for 10.9% of our equity. This is the one relation which we have. But even more important, they are our most relevant strategic partner when it's about sales. In Austria, where Raiffeisen owns or stands for something like 303 outlets, being one of the most dominating brands in the region in Austria, but also in Eastern Europe, where we have in all our countries preferred partnership. How would you describe this kind of partnerships characteristics? So it's between exclusivity and preferred partnership, depending what the legal authority in different market basically allows. But we are the #1 insurance company for Raiffeisen in all their markets. Characteristics number 5, and I'm now on the left bottom part of the slide. What we have is a really proven track record, and Wolfgang will come back to it in like 1 hour, when it's about M&A. The history of UNIQA, especially between the years 2000 and 2012, was a history of M&As. I think we did something like 40 M&As back then, but the most relevant, the most significant one took place just 4 years ago when we acquired in the year 2020 from AXA their operations in Poland, in Czech Republic, and in Slovakia for a purchase price of roughly 1 billion euro. This not only brought a lot of revenue to us, not only also increased our profits, but most of all brought a lot of skills, fresh people, really super educated if it's about pricing, if it's about really technical skills, AI, digitization into our group. And Wolfgang managed to basically roll out those skills throughout the whole region. Item number 6, and this is then also here mentioned on the bottom of the slide, the strong growth, of course, of our group coming, and maybe you had a chance to look on our 9-month results, 2024, is coming from the P&C business and the health business, both of them growing currently somewhere between 10 and 11% on the GWB base. So this in a nutshell basically is just to introduce to you who we are. Now, the management team. And frankly spoken, I'm very proud that 3 of my colleagues are here today with all of us. We are experienced. Altogether, we are 7. There is room for improvement as far as gender diversity is concerned. We are aware about this. We don't hide it. There's already a progress, a kind of program set up how we can improve this. But very important, altogether, roughly 180 years of experience in insurance industry, not only in UNIQA, but also coming from other industries and other competitors. And what's for me personally is super important, a very clear hands-on management approach. It's not a company saying management is somewhere flowing around and just having nice talks. It's a very strict and direct hands-on management approach. We are supported by our shareholder, and it's very important for those of you who do not know our system, how we tier. We do not have a 1-tier system, we have a 2-tier system, meaning the guys here on the left part of the slide, including me, are responsible for the daily operation. So we are the executive team, and then we have a non-executive team, we call it supervisory board, and we just mentioned 3 out of the guys of the 10 being represented there. Very interesting, our chairman, very experienced person, being responsible as chairperson for our most important peer, I would say. He has a Burkhard Gantenbein, vast experience, have a past at Generali and in Helvetia, Austria as CEO. So he knows the industry, he got a deep understanding about the industry. 2 persons of super interest for you, Anna-Maria Dulster, many of you know, due to her past function at the Geneva Association, where she was General Secretary, a very mature and skilled expert about the insurance industry. She was also CEO of Baloise Life and held currently also a non-executive position at Athora Life. To the very right, and I know that you have, some of you have contact with her, UNIQA Capital, a P&C and reinsurance specialist. Jutta was running the global P&C center of Allianz, had a similar position afterwards at Zurich, was at Schroders, and has a really vast experience when it's about reinsurance. So why I say this is because in times like this, our clear understanding is you need sector specialists. You need really people who understand the industry because so many things are going on, and this is just to tell you some names basically behind annual reports. How does the shareholder structure look like? And I'm now moving to the right bottom part of the slide. You know, 59% are owned by the so-called UNIQA Foundation. This used to be a mutual in the past. We have many of such mutuals in Austria. And very important, the only reason for their existence is their participation in UNIQA. So the Austrian law says they are not allowed to keep any other relevant position, investment in any other title except UNIQA. So this means they have a very high interest in profitability. They have a very high interest in increasing the ROE. They have a very high interest in increasing the dividend per share. And this aligns them with our second major shareholder, as I mentioned before. This is the Raiffeisen Group. This is RBI, holding currently 10.9%. And then, of course, we got the free float, currently close to 36%. The targets, and this is what I want to say, and the ambition, profitability, dividends, dividend payout ratio is perfectly aligned between all three groups of shareholders, including with the management. And this is why we mention also here how we are compensated, how we are intensified. This is basically by a normal STI. So basically we get a reward depending how the year 2024 is working. It's about how top line is going to develop, how the combined ratio is going to develop, how the profit before and after tax looks like. This is, I think, normal. And on the LTI, despite ESG targets such as the weighted average carbon intensity, is it about the TSR. So the total shareholder return is of really super high significance for our shareholder, and this should you give the confidence that between us, the shareholder and the management, our targets are aligned. So the guys sitting right to you, left from my side, especially Kurt and Wolfgang, joined the team, joined the top management already in 2011. This was the time when I was appointed, and frankly spoken, we want to show you this slide because you could say, okay, Andreas, you can tell anything, but how should we believe that you're really able to execute? How should we believe that there's a track record? So we took over a company in 2011 which had really a very bad balance sheet, and Kurt and his team managed to fix the balance sheet, to increase the capital position, to bring up solvency ratio. I mentioned yesterday evening in the reception that in 2013, in October, we successfully conducted a re-IPO, a secondary public offering, where we raised something like 750 million euro gross. And this is a working capital, I think, where we proved that we could really deliver basically a kind of growth, and meaning profitable growth, in the last couple of years. In the years afterwards, meaning starting by 2021, we had a second phase we called UNIQA 3.0, where we said, okay, we want to shape basically our country portfolio. Wolfgang tells you afterwards about the background for this AXA acquisition and why we have been so successful in really integrating this in a profitable way. And we kept on investing heavily in the ID backbone of this group. Why this is so important? Because this backbone basically gives us the basis for further automation, for bringing down the cost ratio, for bringing down the admin ratio, for giving a higher confidence basically, and also, let's say, customer satisfaction to our client base. Okay, so this has been basically the last, you might say, 14 years. For the very interesting observers, you might be surprised that the first phase here on the left part already had a span of like 10 years. It's a long time. So we started 2011, and frankly spoken, I think no one of us today would dare to announce a strategy which has a time period of 10 years. Why we did? Because a lot of uncertainties back then, 2011, had been on the market about the future of UNIQA. Will they be standing alone? Will they be sold? In which markets? Back then, we have been present in Italy, in Spain, just not such a strong presence in Eastern Europe. So our idea was to give a clear guidance, to give a kind of reliability to our shareholder. And this is the reason why back then we announced a 10-year strategy. And now we shift to the very right of this slide, and I'm now here in dark blue, and you see what's ahead of us. Now it's about execution. As I mentioned, we have a perfect setup as far as our country portfolio is concerned. We know exactly what we're going to do in the retail business, in the corporate business with our bank clients. We are perfectly aware about what we have to do. And now it's really about operational excellence, increasing profitability, and bringing the growth, meaning a profitable growth again to the company. Two columns, again, if you look further down, if you have a look on the P&C combined ratio net here, you see if you move to the very left part of the slide, we started the somewhere of 101 point something percent. And this was one of the big issues of the group. The group, frankly spoken, had huge difficulties before to be profitable in the core business. And so we managed then, if you look from left to the right, between 2012 and 2023, to bring down the P&C combined ratio net down to 92, 93%. And by this, because we could increase basically the profitability in the core business, there was more room for us for maneuvering if it's about dividends. If you also here look, we started with 25 cents per share in the year 2012, and we kept our promise saying year by year we want to increase the dividend per share, ending, at least for that moment, at 57 cents per share in the year 2023. Very interesting for you, and I gave a hint before when I talked about the UNIQA Re. If you then move to the right part, you see that the sources basically of profit, that these sources are shifting. We have been depending a lot on the Austrian business before, and if you then look 52% 2021, if you see now, even if the contribution of Austria is increasing in absolute terms, right? But percentage-wise, because we have this strong, dynamic, growing, profitable business in Eastern Europe, there's more coming from the CE region, and even, and this is what you're going to expect in the future, more from the reinsurance business. Looking at the KPIs, like how successful have you been in the last 4 years, frankly spoken, out of 6 in 5, or at 5 KPIs, you see a green color where we managed, if you look on the figures after the first 9 months 2024, to reach our targets. Just the ROE here is at 12.7% and in yellow. Why? We had one COVID year where we basically did not reach our return, and this brought down the average. So this is the reason why we are below, bless you, 14%. Okay? Then shifting to the right, and this is in a nutshell already something what you hear afterwards in a more elaborated way from Kurt. What are the most relevant KPIs now for the upcoming 4 years for this phase? UNIQA 3.0, growing impact, delivering excellence. First, as I mentioned, at least a 5% CAGR as far as the top line is concerned. I say at least 3% Austria, 8% on the international business. This is how it looks like. Second, bringing down further the admin cost ratio, clearly below 15% due to those heavy investments I mentioned before in IT, in DG, in AI. Third, a combined ratio, and here we talk about net. On the left hand, you see gross figures. On the right hand, you see the net figures, clearly constantly below 94%. A stable and safe ROE of at least 12%. A CSM sustainability ratio, and this combines health and life, both of them, roughly at 90%. And as I mentioned before, an earning per share CAGR of at least 6%. Solvency ratio, and Kurt gives you afterwards the guidance why, will remain high. So our target range is between 180 and 230%, and as I said before, a constant payout ratio between 50 and 60%, and by this a progressing dividend, meaning in absolute terms growing year by year. This is basically the investment case. How are we steering the business? Basically 3 items starting on the left bottom part of the slide, very important: customer satisfaction, currently and also future at least 4.5 stars on a 5-star rating. Seems to be normal to you. It's not, because, gentlemen and ladies, if you really look back to our own experience, right? Our own experience towards service provider are increasing day by day, and our competition is not other insurance industries around. The competition are other service providers, especially in digital times, who manage really to deliver first-class customer satisfaction. And so we have to keep on this very high. This is a fight for the trust of customer, and as I said, we have 17 million currently and aim for having 20 million in the year 2028. Second then, and we move now to the right, it's about best employer. The one thing is to get people in, but the second thing is also to keep them motivated, to keep them satisfied, and to have a very high dedication and engagement. Also here you see a 4.5 star target. Currently, we are in both parameters somewhere at 4.0 stars, something like this. Just one figure. I mentioned before 15,500 employees, which we currently have, which are serving those 70 million clients. In the last 3 years, each year, we onboarded freshly 2,000 people each year. 2,000. The speed will decrease a little bit, but I want to say, within a few years, basically 50% of the workforce at UNIQA is new. Why? Because we have the same demographics basically in our group as the whole population. So we had a larger part of more senior, experienced colleagues, which retired. But the second thing is we brought in, and Wolfgang comes back to it later, also René, a lot of new colleagues having a lot of super talents when it's about AI, digitization, pricing, stuff like this. So this means there's also a shift as far as the job families are concerned. Those two parameters shall help us basically to boost the very important, the North Star here, which is described by economic success, and this meaning increasing the profitability and operational excellence. Let me briefly address the megatrends. Starting on the left side, you can expect that this strong booming region in Eastern Europe, even if currently Europe overall, if you allow me this comment, is really struggling and really is in danger of losing basically its role in the world. If you see how strong Asia is growing, if you see how strong America is growing. But however, within Europe, this region, Eastern Europe, will grow much better than the rest of Europe, much better than Austria, and much better than the rest of the European Union. So our forecast says 2 to 3%, just the economy. And please have in mind, Wolfgang comes back to this later, that the insurance market are going for a catch-up potential as far as the insurance penetration is concerned. Two numbers, one person in Austria on average spends per year 2,100, 2,000 euro on insurances in Austria, 2,100, 2,200 euros per year on insurances. In our largest market in Poland, where we are, and very happy that our CEO, our Polish CEO, Marcin today with us, is roughly 400 to 550 euro per year. And this just shows how big, how tremendous big this catch-up potential of CEE is. If you move then further on to the right, digital, I said, just one example, already 95%. If you buy an insurance product at UNIQA in Austria currently, for instance, in household or accident, is based on a straight-through process. This means no one is touching basically this policy. And this gives, of course, a much better confidence on the customer side. It's much more convenient to our customers. But on the other hand, of course, it also helps us, as I mentioned, bring down the admin cost ratio. Moving to the middle, climate change. Company will be ESG neutral in Austria in 2040 and group by 2050. We have in front runner here, exiting already a couple of years ago, the coal business, and René will come back to it in a second, also have a clear path now towards exiting oil and gas and so on. Roughly 10% of our assets already allocated and directed into green assets. Very important, and this will be, I think, one of the major topics for today, and I shift now to the right, accessible health solutions. 44% of the market share in Austria do we have in the health system. You will hear from René why this is a huge competitive advantage. Frankly spoken, we keep those clients, very loyal clients, clients who are not really price sensitive, and we can really work a lot with them as far as cross-selling is concerned. We keep on investing into this healthcare ecosystem. You might know that we are also the largest owner and runner of private-owned hospitals in Austria, because we want to offer our clients, and when I say 44% market share in Austria, this means in absolute terms 1.4 million clients. We offer them direct access. We offer that a comfort, a quality which basically the public healthcare systems do not offer anymore. And very important, also by having introduced a second brand, which will be introduced by René afterwards, Mavi, we address those services in the healthcare ecosystem, not only to our current insurance clients, but basically also to the other outer world, to the people out there, because we feel this strong pressure, this strong desire from the population. And again, not only in Austria, for really affordable, high-quality healthcare solutions. And this is where we keep on investing. Moving to the right, and this goes hand in hand with this health topic, aging society. A topic will be addressed afterwards by René. Also, what you see here is we are the market leader in the meantime with minimal investments in the 24/7 care in Austria. We're the market leader within 4 years. And second, we're the market leader when it's about mental health solution, which became a real relevant topic, especially after COVID, after the years 2020, 2021, mainly based here on the B2B2C model. But René is going to come back to it later. So let me summarize my last 2 slides. What does this case look like? First, remembering you, super diversified company, both as far as the top and as far as the bottom line is concerned, number 1. Number 2, stability market in Austria. Number 3, huge catch-up potential in the growing market in Eastern Europe. Number 4, healthcare beyond insurance. Number 5, a very robust capital position, very strong capital position, and a modern state-of-the-art governance. And last but not least, what we offer you is on average at least 6% earning per share growth year by year and a progressive dividend. How do we come there in detail? Just 4 short elements. First, starting on the left top part of the slide, Austria. A market which we know, one of the wealthiest countries, not only in Europe, but worldwide. Very high customer loyalty. This incredible strong brand UNIQA, which I addressed before. Very strong SME business everywhere. So frankly spoken, even if currently the overall economic forecast doesn't look that well, but there's a very strong, stable country with a very stable insurance market where we have this very strong position being number 2. What we will do is first focus on health business also in Austria, and second also have a strong focus on bringing down further the cost ratio as well as the loss ratio. Loss ratio focusing, for instance, also on SME, on pricing, and on strategic claims management, meaning being more precise how we handle basically our claims in the motor business, directly more to basically repair chains, which we also have a direct relationship with. Moving to the right, and you will hear afterwards from Wolfgang, booming region, well-diversified portfolio. You can expect that this region will contribute more and more as far as profits and dividends are concerned to the group. And already answering a question which I see in your faces, yes, it is possible also for us to get the dividends out from the countries, even from Ukraine, but you will hear afterwards from Kurt. Then on the left bottom part of the slide, deep dive done by René. Life offers us opportunities, especially when in times like these we see demographic changes. We have in all our countries huge discussion about Pillar 2, Pillar 3, and frankly spoken, we see it also as our responsibility to be in a strong dialogue with the politics here and there, basically how we can foster this, how we can boost this, because poverty, when you get old, is something I think where we should fight against it, and frankly spoken, which also delivers, of course, a business case for us. Even more important, and I'm still here in chapter number 3, on the right side of this page, health initiatives being number 1, 44% market share, investing into the health ecosystem, and very important for you, a very strong new business value in this segment, which really supports the profit of the group. Summary, and then I'm handing over, and I think it's a perfect bridge to the CFO part afterwards to Kurt. 5% growth on top, at least 6% growth as far as EPS is concerned. Bottom line, 50-60% constant payout ratio, progressive dividend, combined ratio below 94% net, and an ROE of at least north than 12%. So this in a nutshell, and thank you at least for not sleeping in this part, is our story. Thank you for your interest, and Kurt, may I invite you to join me at stage so that you basically can provide the distinguished audience all the details about our KPIs. Thank you for this.
Yeah, ladies and gentlemen, warm welcome also from my side here in London, and let me talk about the active finance and risk management. Why active? Active insofar because we addressed 3 main pillars which we found out on the one hand dangerous or at risk for UNIQA, but on the other hand, we actively are managing them. So that means we have mitigation effects so far in our plans, in our portfolio, so that we address them. So the first thing is, on the left-hand side, you see it is about interest rate. On the one hand, we see a global economic development at the moment, which has impact on the interest environment all over the world, and then also on our portfolio, and therefore interest rate environment is a topic for us. Uncertain outlook on the one hand, impact on our sensitivities in life and in health. We have a huge life book in Austria. We have a huge health book in Austria. We are growing also on the life side internationally. Therefore, the interest rate environment is key for us. What we are doing here, I will talk about in a minute. Second thing is about inflation. So maybe you will think, okay, inflation is down for the time being in Europe. Yes, that's correct. Also, the outlook is very positive on inflation in Europe. But what we learned is that inflation rises constantly up when there are crises. And we saw those crises in the last couple of years. And we are not on that level that everything is stable in this world. And therefore, also inflation is a topic we would like to address and how we mitigate this. And the other thing, the last thing is that we address is the natural catastrophe in this region where we are working, but not only in Europe. We have the same topic in the US, where, of course, UNIQA is not having risks taken, but natural catastrophes, climate change is an issue, not only in the year 24, which we have absorbed, but also for the future. What we're doing there, how we can mitigate this, on the one hand, location in UNIQA Re in Zurich, on the other hand, NatCat Competence Center that we built up for having here better risk management, underwriting management. This is the third topic I would like to address. So let's go back, interest rate. On the left-hand side, you see how we estimate the interest environment in growing impact area. So it's oscillating around the 4%, the new investment yield of UNIQA. So this is a little bit the starting point for us. So on the one hand, we do not expect big jumps in the interest rates in the next years. On the other hand, we see some oscillating around 5 to 10 basis points possible. What impact does this have? To read the right-hand side of this slide. So you see on the right-hand slide on the upper part, the key Euro spot rates for our business lines, for P&C, for health, and for life. So why that? Because we have different durations here. The P&C side and on UNIQA is around 5 years. We have the life side with 12 years and the health side with the longest duration, in that case about 22 years on our side. So movements that have been taken place in the year 2023, that's the dark blue, and in the year 2024 shows you the impact on basis points on our business. And this translates then into the P&L, which is shown below, in the terms that are shown here. So that means we absorbed on P&C side 14 million euros in the year 2023, 5 million in the year 2024, the same to read for life and for health. Why this is important? Because A, it shows that we have mitigated a lot in the last years. When you look on the left-hand side, we have oscillating around 4%. It means we do not expect much more on that level. On the other hand, very important is that we have an active asset liability management, which also mitigates this impact on moving interest rates up and down in our P&L. Last sentence on this slide is, for health and for the life side, we have also to take into consideration the movement on the contractual service margin. So in that case, we have also here not a direct impact on a yearly basis into the P&L. It's distributed or it's allocated over the CSM, which is in the life side of around 70 years and on the health side about 32 years, but René will come to that later on. So that's about interest rate, interest movements and impact on our P&L. Second topic I addressed was about inflation. So let me start with Austria. Austria, and important because I got known that this is not the same case all over Europe. Austria has a situation where we have automatic price indexation. So that means 98% of the portfolio in Austria, retail, but also the corporate side, and of course also the bank side, customer has a 10 years contract, and with this they have an automatic price indexation. So that means the higher the inflation is, the higher the price indexation is in Austria. We saw in the recent years that there is no impact on lapses. We saw in the last years that also the customers did a stable payment on that respect. And with this automatic indexation, we have a little bit of a security level of the level of inflation in Austria. Differently in the international business. In the international business, we have more or less 1 year's contract. So that means the renewal takes place each year. Here we have the Q1 always, which the peak on the renewals. In the international business, and referring to the speech of Andreas, especially with the acquisition of AXA, we also brought in high pricing knowledge at UNIQA. So the USP and UNIQA is that we are very, very flexible and very, very variable in adapting our prices. And this helps us also on setting inflation into our products. Second thing is, when we talk about inflation, that we have also our reserving level changed in the last couple of years. IFRS 17 helped us in that case. So at the moment, we take in a 2 years row an inflation in force. So that means we calculate in our liabilities, in our cash flow management, also an inflation of around 2 to 3%, depending on the countries, to have here safeguarding. So this is the topic of inflation, and we have also the mitigation functions here. The last point is about natural catastrophe. So I think everybody knows that this is coming more and more severe, more and more frequent. On the left-hand side of the picture, you see the so-called peak perils, earthquakes, for example. This is what UNIQA is not at risk in that case. So we are not working in countries like Turkey or other countries where earthquake is a high risk. That's a good thing. On the other hand, we are working in countries where the non-peak perils are very severe. Austria, for example, Czech Republic, the flood of Boris that was in September this year. Exactly those are the countries where we are at risk. Austria again, then with snow pressure and hail and thunderstorms in that case. So this is the area where we have to mitigate. You see also on this picture that there's a huge difference between the losses that took place and the insured sum that is in that case. So is this maybe also a chance for us? Yes, it is. Why? Because we can mitigate this. We can mitigate this with our UNIQA Re in Zurich. In that case, the high diversification effect that we have there. A NatCat competence center where we are working with models which give us also the possibility to see how much risk do we have in which area, what is the pricing for that area. So where can we say, okay, stop, no more risk in that case. And the last thing is about reinsurance, data quality, and also this mitigating natural catastrophes at UNIQA in the future. And last but not least, we have also embedded in each year not a flood like Boris, but a significant amount of effects to have here a safeguarding also on the balance sheet. So these are the three main topics I would like to address because those are the other main pillars that we see as active risk management for UNIQA. We talked about UNIQA Re. UNIQA Re is not only a dividend distributor in the future, UNIQA Re is also in Zurich at the moment among the top 5 insurance companies. That means we have also a highly dedication to the market in Zurich. And we started 2 years ago an external reinsurance, which is at the moment 73 million euros gross written premium, expecting this year of around 150 million euros, and with a significant also amount of EBT to be expected in that level. Why that? Because it's about diversification. It's about also being here not only dependent from the internal reinsurance, but also take, in that case, niche markets. And you see here the split on the markets into consideration to get the diversification in UNIQA Re, to get liquidity into the company, and also be able to pay the dividends to the holding company in the future. The next topic I would like to address to you is the solvency position of UNIQA, because it's the fundament, it's the basis of that what Andreas told to you. And let's take on the one hand, first of all, the target range of 180 to 230%. Maybe you remember UNIQA in the last strategic program set the range of above 170%. We stepped away from that and say now the optimal range is between 180 and 230. Why that? We want to mitigate macroeconomic shifts in that case. That means the biggest risk for UNIQA is the interest shift. I started with this. So these movements around 50 basis points is of about 18 percentage points impact on our solvency ratio. Second thing is about the spreads. Spread movements about 50 basis points impact UNIQA's solvency ratio of about 30 percentage points. So that means in total, this is the 50% buffer that we want to keep to absorb those macroeconomic changes. And this is important for us because within this buffer, we're also looking on M&A activities. So Andreas told you that we have been grown in the history out of M&A activities, successful M&A activities. And this is also the part of our story in the future. And to be ready for that, it's important to have, on the one hand, this buffer between 180 and 230, but also having the capital ready for different M&A activities. Why different? Because it can be, on the one hand, traditional M&A like it was in the history, but also others like vertical integration or in other fields, we are ready for M&A activities, and therefore the buffer. Second thing to address this here very openly, I was very often asked in the future, okay, is UNIQA ready for a share buyback program? And I would say theoretically yes, but not at the moment. We have a free float of around 37 percentage points. We want to keep this because the liquidity of our shares is important. Secondly, the investments that we take are giving to us more profit than the investment in our own shares in the future. So therefore, we say theoretically yes, but firstly, we would keep the money for our investments and for growing the company and for growing also in our markets. Second topic to address, because this also would bring down the solvency ratio, is bonus dividends. And bonus dividends, to our opinion, are then valid when we have bonuses to distribute, but we do not calculate with any bonuses, with lucky punches in that case, so therefore also bonus dividends are for us not a topic in this strategic program. And last but not least, but I will come back later when we talk about our funding and our equity positions, we have tier 2 instruments in the market where we have to decide even to refinance them or not refinance them, and this would also have an impact. Just to tell you, the two tier 2 instruments that are on the market and are due in 2025 and 26 would have an impact of a decrease of 20 percentage points on the solvency ratio if we do not refinance them. Focus on an S&P rating stays very, very in our core, and in that case also to deliver the results that have been addressed. And last but not least, the target of the market risk, because UNIQA started with a market risk level of around 85% in the beginning of 2011. At the moment, we are of around 57. We keep the 64 because we want to grow. And when we are growing, also the assets are growing, and therefore the level of 65 is for us a confidence level that is very, very key. By the way, we're also working on a full internal model. That means then we have also a position to have a full value-based management all over countries and all the business lines. Plus, we are not that dependent in the future then from regulatory topics like the Solvency II review that is ahead of us with this full internal model, which we want to get an approval in 2027 at the latest. Sticking to the volatility and sensitivities, it's also key to talk about our biggest sensitivities. It's beside the volatility adjustment, which is of course one thing that has the biggest impact, but this is not A, under danger, and B, not the topic here. It's about the interest rates movement on the one hand, and the second thing is to see also the movements and the sensitivities on the spreads. Why is this the case that UNIQA is so sensitive? A, it's on purpose, to be honest, because it's a life book, it's the health book in Austria, which is the source and which is the reason for that. The health book in Austria, and you remember the slide when I started with the three main pillars, the health book in Austria has a duration of 22 years on average on the liability side. The longest durations are 60 years because people start very early to step into the health business and the liabilities are then growing. The asset side is about 12 years. So we have in years a duration gap of around 10 to 12 years. And this causes the high sensitivity on the interest rates. So is there a possibility to absorb this? Yes, there is, and we're working on that. Is there a possibility that we can close this? Theoretically, yes, but we do not want this. Why? Because A, if we want to close this duration gap, we would have to go very, very high in long duration assets, which have maybe illiquidity premium, which is okay, but also that they maybe have also the possibility to have better earnings. All okay. But we are, in that case, a little bit locked in. And locked in means that we cannot take out a little bit of gains. Locked in means that we have the only liquidity resource then in P&C, and this would be too risky for us. Therefore, we say, okay, we keep this sensitivity. Slowly, we want to reduce it, but not to completely close it. Secondly, there are also options lying on hedging, all swaptions, for example. Yes, also this is a topic that we are thinking of, but swaptions also have an accounting treatment, and we have to pay attention between the accounting treatment on IFRS and on the local results, so that we are not, in that case, have a benefit in IFRS, for example, but have a negative impact on the local results. Therefore, slowly reducing and also that case coming to a sensitivity which is a little bit lower than that one, but closing the completely duration gap is for us at the moment not a topic. Why that? Because we are running the company on a liability-driven approach. Liability-driven approach means, on the one hand, very cautious because we have a huge portfolio of personal lines. Therefore, we are liability-driven, but not only that, we are also cash flow-driven, especially in the life book in Austria. We are 100% cash flow matched. Very important in times when interest rates go up and down, and we can also say, okay, we can fund the portfolio in Austria with the cash flow matched asset side. Therefore, the fixed income portfolio is dominating in our portfolio. It looks a little bit of a very boring portfolio, but that's the reason for that. If you look on the right-hand side, we talk about roughly a 22 billion portfolio on balance. We have also off-balance portfolio, which is the pension funds, but is not the case here. And it's driven by the bonds. But we have also a portfolio which is, for us, very key for diversification. It's on the one hand the real estate portfolio, so we talk about 2.4 billion in that respect. Austrian portfolio mixed by international, so Poland, for example, but also in other countries, the real estate portfolio is valid for us. And this is also, in our new strategy, part of our asset allocation system, also key in that respect. Second thing that we're doing is that we're investing also in so-called illiquid assets in terms of long-running assets. On the one hand, we do this for ESG purpose, therefore 10% of portfolio on sustainable investment is part of our strategy, but also for, in that case, to get a little bit out of illiquidity premiums for the long-lasting business, especially for the life side. Increased yields and growing reinvestment volumes benefit on ordinary income. We have to distinguish at UNIQA, especially under IFRS, between personal lines, where we have the treatment of the variable fee approach in that case, so a different story than in the history. Not everything goes directly to the P&L. In that cases, the portfolio and the profitability comes over the CSM. Directly impact also ordinary income and investment yields on the P&C side, because here we have no variable fee approach in our accounting treatment. So this is the ALM supporting also the profit of UNIQA, and on the other hand, safeguarding solvency and also interest movements. Coming to P&C, the strong pillar of UNIQA, also in terms of profitability in the future. What I would like to address here is the steering model that we have, and that also contributes to the high profit in the future. So under IFRS 17, and also how we report in the future, is the setup and the setting of combined ratio. You have the attritional claims on the one hand. This is what I want to talk in that section. We have the nat cat topic. We talked about that some minutes ago. You have the topic of the reinsurance result. Also this was tackled today. And you have the discounting effect, which is not in our hand, but in that case also the message here, we do not expect high discount effects in our plans of UNIQA 3.0 growing impact. We are very cautious in that effect. If it comes, we'll take it, we have to take it, but we do not aggressively count with discounts effect like 2 or 3% in the future. Talk about the attritional claims. Starting point 2020 was of around 62%, and we came down by 3 percentage points on group level over the last couple of 4 years. And we want to come additionally down to 1% up to the year 2028. So now you can say maybe 1% is much more less than the last 4 years, the 3%. Looks like on the first glance, but on the other hand, take into consideration we have a huge growth in the international business. Wolfgang will talk about. We have Austria, the growth on the P&C side only here, more than 5% in a market which is very, very mature. So that means despite the good growth and despite the growth story, we have a less attritional claims ratio planned in our strategy for the next years. Coming finally to the distribution of our profit. The first time that UNIQA shows the cash to holding, the first time that UNIQA shows also the distribution level of the dividends and also the earnings. Let's start on the left hand side and on the upper side. So that means we delivered in the last 4 years around 1.1 billion euros cash to holding, and this should increase in the next 4 years 15 to 25%. So that's the key for paying the dividends. Second thing is, you see this on the right-hand chart. How is the distribution? How is the setup of these dividend payments? And here you see an overhang on the Austrian business and a very high dependency on the Austrian business. And this will change in the next 4 years. So they will say that the balanced portfolio and the balanced earnings and also a balanced cash flow to holding between Austria, international business, and also taking into consideration the reinsurance business in Zurich, being composed from internal and also from external part. So that means also a stable position, cash to holding, between those two core markets and two core segments that we have. You see on the right, on the chart below, that also the earnings and the profit are going hand in hand with the cash distribution. So that means we are, in that case, very well balanced between the profits and the dividends and the cash to holding. And what I also want to address on this slide is our balanced debt maturity portfolio. Yes, we have a leverage ratio of around 39%. I talked several minutes ago about the topic of maybe refinancing or not refinancing the two-tier instruments 2025 and 26. We will decide due in time. But just to remind you also here, if we do not refinance those two-tier instruments, the leverage ratio would go down from 39 to roughly 30%, which gives us also then headroom for other activities and for other financing in the future if we need them for M&A or for other growth potential. So this should close the circle about, on the one hand, solvency, dividend distribution, sources of dividend, and also the possibility and the flexibility of financing the growth in the future. So financial key messages I would like to address in the end is UNIQA, 5% top line growth. This is more than 2 times the GDP in main markets of our group. A strict cost management, bringing down the admin cost ratio by below 15%. Still a strong solvency position, but with a clear target and with a clear message in terms of how to use it, and also being ready for M&A activities in the future, and also being the fundament of the growth for UNIQA. A net income growth on EPS by more than 6% based on the reported results. In that case, that means also that the earnings grow more than the top line, which is very important for us, coming back to the P&C business, which is the sourcing of that. And a dividend payout by 50 to 60% with already known progressive dividend payments in the future, with a stable, sustainable ROE and attractive shareholder returns. In a summary, again, the numbers you have already seen so far. And let me also use this slide to talk about, okay, the starting point, 2024. So I can address in that level that we expect the year 2024 at least on the same level as the 9 months have been reported. So in that case, we have around 2% earnings growth in relation to the year 2023. We expect at least that this is also for the year end 24 the case. With a good combined ratio and also the possibility to start the progressive dividend payments for UNIQA. With this, I would like to end the section of active risk management. Also here, thank you for your listening. And now I would like to hand over to Wolfgang for the section of international.
Thank you, Kurt. Also, very warm welcome from my side. It's a big privilege to share with you certain key insights of our international business, as it was as well a real privilege for me to be among the founders of our international business back then in '97. And let's have a first look what we have achieved so far. Let me start maybe with the biggest asset we have grown and created over these 25, 26, 27 years. This is definitely our customer base. So last year, 15 million customers in Central Eastern Europe, representing roughly 80% of our group-wide total customer base, were generating a premium income of almost 3 billion euros. What is also very important, at the same time, we delivered also a profit of roughly 230 million euros, which gives you an indication that this growth story, especially over the recent years, is really a profitable growth story. And if we look to the first 9 months of this year, you also can see that we record a growth rate again of almost 14%. So basically, we continued on this growth path, which we started already last year. And this growth goes along still with a very profitable book. You have to take into account that the combined ratio displayed here in the range of 92% contains already the impact of the severe nat cat event we were facing, not only in Austria, but as well in Czech Republic, Slovakia, and Poland in September, October this year. So the impact here is roughly 7 percentage points, which means that we are still on a really great combined ratio of 85, 86% if you would exclude this event. This development also led us to the top 5 in Central Eastern Europe. We entered the top 5 position already back then in the year 2021 after the successful acquisition and integration of the AXA companies in Czech Republic, Slovakia, and Poland. And with this growth rate, which is definitely outgrowing the current recorded market growth in Central Eastern Europe, we also managed to gain permanently market share, and currently we are close to 7%. The entire growth is backed by a well-balanced and diversified portfolio. Andreas was mentioning it before as well, Kurt. The entire story is quite a balanced one, so we are not dependent on one specific line of business. We have here a really well-balanced portfolio, which is more or less mirroring the portfolio mix you have in Central Eastern Europe. If you would go into details, you see a slight overweight in health, even though you see it's a very small part, but it's even higher than what you would record in Central Eastern Europe. We also see that we have a higher portion of P&C business. And what is very important, within this P&C business, we see less dependency on motor than our competitors have. So really a well-balanced and diversified portfolio. Same if you look to the business model mix. Yeah? The business model mix is basically the prevailing way how we look to our business, and it's also reflected in our board composition. So when you look to a board chart of UNIQA International, regardless in which country, you will find responsible board members for retail, corporate, and bank. You will not find a chief sales officer. You will not find a chief insurance technical officer. You will find people responsible for a customer segment. And responsible for a customer segment means they are responsible for the product and services, they are responsible for the respective processes, the underlying processes, and they are responsible for distribution. We call it end-to-end responsibility. So also here you see this very well-balanced portfolio. And when it comes then to the contribution to this EPT development per country, per region, also here I think we made our homework in the recent years. Of course, there's a strong contribution from the big and from a CE perspective, more mature markets in Poland, Czech Republic, and Slovakia, accounting for more than 60%, yeah, almost 2/3. But you also see that from the remaining 1/3, we managed in a tremendous great way also to make the very heterogeneous setup in SCE profitable since we put it under one umbrella. And I will come to this later onwards. But to summarize this page, I think it gives you a perfect impression what the track record has delivered so far. And on the next pages, I would like to focus what is ahead of us. Let me turn first to the question why CE is the right place to be, especially for an Austrian insurer. Please do not forget, Austria is considered as the gateway to Central Eastern Europe. Yeah? And why it is that important? Because from an insurance industry perspective, this is definitely the market to be for 3 main considerations for UNIQA. First of all, the GDP growth we record in our CE markets constantly outperforms the European 27 average. If you take further into account that the insurance markets are non-mature, and it's a matter of fact that non-mature insurance markets are even outpacing the GDP growth development, you see that the insurance market even benefit out of this fact and even outgrow these markets. And on top, I was mentioning it before, with growth rates in 23 and also in the first 9 months of 24, with a growth rate of 13.8%, we are definitely outgrowing this fast-growing insurance market in Central Eastern Europe. So you have basically these three triggers which confirm that for UNIQA it's the right place to be there. And you see here a CAGR UNIQA achieved over the recent 5 years, in a range of 17.5%. Even if you would exclude the impact of the AXA acquisition, which is roughly about 10 percentage points in that respect, we still have a growth which is outperforming the CAGR we have seen on the market. And please take into account this also contains the early years of the AXA integration, where of course our focus was very much inward in order to prepare the field, to prepare the right to grow. Another matter of fact is, and this is derived out of the previous slide, is of course the continued international convergence towards the mature markets. And what we have presented here to you is the 10 years CAGR in our CE setup. And if you look to the figure, if we compare it with a mature market like Austria, just the market development is 4 times faster if we look to the insurance premium density, premium per capita. And in this period of time, the premium per capita in Central Eastern Europe was growing by 100 euro per capita per annum. Now you might say, is this impressive? I think it gets impressive if you look to our customer base, which was constantly growing. And if you take into account that currently we leverage this 100 euro increase with a customer base of 15 million customers, I think this is quite an impressive figure. And more to come, and this is our clear aim to grow our customer base even up to 20 million throughout the next years. If you look to our story and what is ahead of us, this slide gives you a perfect overview about the 3 stages we were going through and we are heading to. First of all, I think we can call it was the market entry, it was the selection to pick the right countries, to pick also the right targets. We have to admit, and everybody who is an insider knows it, we were not first movers towards Central Eastern Europe. So when we turned in '97, some of our international peer groups and competitors have already been there. So this resulted, on the one hand, that it was not possible to acquire any platform acquisition across countries. So we had a quite heterogeneous setup of countries we acquired at that point of time, from the shareholder structure. Some of the acquisitions we did even in a staggered sales approach. So which means it takes you time to grow into the maturity of the respective shareholder structure in the countries. Some of the countries we even opened up via greenfield. I think it was not an easy task for us, but it provided us with a lot of experience. And we built on this experience when we then finally consolidated this setup. And the successful consolidation resulted that we turned for the very first time this international book into a profitable one. And this was then back in the years 2017, 18, 19, when the CE region delivered first positive results. And it was also, again, under the headline, the right to grow, when our shareholder committed for the biggest transaction which ever have taken place in the Austrian insurance industry. This 1 billion investment in AXA Central Eastern Europe subsidiaries. And I think this is another key milestone in our development, because it was not only acquiring a top line of roughly 800 million euro. It was not only acquiring a bottom line between 70 and 80 million euro. It was acquiring the know-how and the technical excellence of a global leading insurance group. And combining this with the experience and with our strong dedication over decades in Central Eastern Europe was, Marcin, our CEO from Poland, is here. I can say it today, I think it was the perfect fit. And We took this opportunity of the AXA acquisition as well to transform our entire business. I was mentioning before this customer centricity, which is reflected on board level. Yeah. We also took the opportunity to establish one management information system across all the countries, where basically we as top executives and every top executive member in the country has on the fingertip all information available on a monthly basis. This is harmonized, this is cloud-based, and we are working in, Vincent Benedict is here, responsible for the performance management international. We are working constantly also on advanced analytics, not only to analyze the past, but already to predict the future. And this is something we are doing in a very transparent way. On top of this transparency, I would also like to underpin and underline the 1 million customer feedbacks we gain every single year in a harmonized and standardized way across our entire CE setup. So basically, we have divided our customer experience in respective customer journeys in a harmonized way across all countries. And we gather 1 million customer feedbacks every single year, which is very important and adds to this very deep knowledge of our internal facts and figures. The customer-centric structure I already mentioned. Why we are shifting now to the third phase of our development. Create growing impact. Yeah? To grow with these fast-growing CE markets, this is not our standard. This is a kind of conditio sine qua non. Yeah? And our daily ambition is to improve in our business as usual on a daily basis. But what really makes the difference is the key strategic initiatives we implement and we put on top, where we have a focused approach on key strategic initiatives across countries. This is something we align in the top executive team, and I can tell you these are only 14 people from the strategic unit in the headquarters down to the presidents of the supervisory boards and my general managers in the countries. These 14 people, they decide on key strategic initiatives. We are running then across countries via a community concept, where we can leverage the entire topic. And very important as well is our strategic portfolio management. I will come to this in 1 second, where we constantly try to optimize our country setup and how we steer and how we manage. And of course, we are looking actively to mergers and acquisition. But not only in the plain vanilla way, yeah, we are also looking, and Kurt mentioned it before, to vertical integration, where we can go beyond just being a pure risk carrier. The portfolio optimization I mentioned, strategic country portfolio management, what it means. I think the most important KPI in that respect you have on the top hand left. You see that from the year 2019, where basically we had an average premium per business unit we steer of 125 million euros, we now, thanks to mergers and acquisitions, yeah, to also divestments, to restructuring, for instance, of the CE region, to put together this very heterogeneous country setup under one common governance, we achieved an average premium per business unit, meanwhile, of 600 million euro. And thanks to these moves, we are really competitive also if we look to our international peers in the region. You see down what were the consequences on the country portfolio. Basically, we condensed the country portfolio down to 5 business units. Yeah? We are running Slovakia in a kind of branch concept out of Prague. We have our strong contributor, Poland. Yeah? Imagine the first international country which was exceeding 1 billion euro gross written premium income. Yeah? We have then another core market for us, Hungary, one of our neighboring countries, where of course where we are facing certain challenges there, but also there we have a clear commitment to grow the book in the future. We have the strong Southeastern European pillar, where we gathered together 6 countries under one regional governance and downsizing the local boards to the minimum. So basically, we also have there the approach that we have a strategic panel which takes the decision for the entire countries in order to have a harmonized way when it comes to products, but also, as a consequence, a harmonized way when it comes to processes and IT. And last but not least, Ukraine. Our ambassador mentioned it yesterday. Yeah, we stand with Ukraine. Ukraine, and you have seen it even on my first chart, is still delivering profits. I think it's not the most important thing in times like this. We have there roughly 1.3 billion customers we are committed to. We are long-term. We have roughly 1,000 employees we are committed to. And what they are generating there in times like this is outstanding. We have in the first 9 months a premium growth of 10%, and they deliver in profit in the range of 10 million euros after the first 9 months. And I think UNIQA is well positioned when it's getting to the time to ramp up this country again, because we have shown commitment in the most difficult times. On the right-hand side, you see more or less the track record, which is resulting out of this, showing the profit turning from 50 million up to 230 million. And now let me focus on one of the backbones of this EBT development. This is definitely the successful AXA CE integration. And it's easy to be presented here now, but believe me, this was not a walk in the park. Yeah? You see the number of headcounts we reduced. Yeah? 530 headcounts, yeah? They stand for roughly 50% of our total headcounts in the 3 countries, Poland, Czech Republic, and Slovakia. Yeah? You see that we generate from next year onwards a yearly run rate of 55 million euro of savings of the total costs. The joint cost base at the beginning of this journey was 200 million euros. And I think, Andreas, we can disclose it nowadays. What we promised to our supervisory board at that point of time was, we will generate 20% savings. This was the strategic rationale when we got the deal approved. You see, we over-delivered. And if I want to take out now the perfect example out of this really great integration we achieved across 3 countries, it's definitely Poland. And also here I want to draw your attention to the bottom right hand. It shows exactly what I said before. It was not a walk in the park. We were very much internally driven in the first 2 years of this integration. And this is displayed here as well in the growth rates. But you also see now we took fast decisions. We really had a great execution track record, and we earned the right to grow. In the last 2 years, we were turning our attention to the market, to the outward. Our homework was done, and this is the result. We are growing. We are the fastest growing company in Poland, and we are the most profitable company in Poland. We have shown a track record in these high growth years, 23 and 24, and already starting in 22. And you can look, these are official published figures from the Polish market. When it comes to the combined ratio, UNIQA had the most profitable combined ratio on the market now for 2.5 years in a row, every single quarter. So I think this is really a testimonial of a profitable growth. Now let's look to the future, creating growing impact. I said before, just growing with the market, this is not our ambition. We want to outgrow them. I was mentioning the key strategic initiatives. It's very important to mention that these key strategic initiatives you see here on the slide are set together between the strategic unit on the holding level and our general managers in the country. So this is a joint endeavor. This is a joint mission we are going for, and this really should make a difference. And for you also very important, these are not key strategic initiatives we put then on PowerPoints with traffic lights. No, these key strategic initiatives are embedded in our business plans. So with other words, whenever we turn to one of these initiatives, we put this in our midterm plans on top and on bottom line level. And then it becomes a kind of obligation for us to run for this. This is not a project we are doing for the sake of projects and to have nice PowerPoints. No, this really creates impact. I will then show you that these KSIs, driven by the business model logic from a customer point of view, retail corporate bank, is one topic. And this is a recurring process. We are doing this basically every 6 months that we look into it, because we are driving all these topics via communities. And this means we are bringing together the best heads across countries in one unified approach. So whenever such a KSI is selected, we take our community and we select the best people which have the perfect fit for the respective KSI. And perfect fit means that currently we have more than 1,000 people already being active members in these communities across hierarchies, where we have the real skill profile available. And I think this is the treasure for UNIQA. And as Andreas mentioned, the skill set we constantly grow via communities because there's an exchange across countries. On the other hand, if we define certain key strategic initiatives, it also gives us a hint which skills are required. And it's also very obvious if we have all these skills available. And also this is very good for your company culture because you stay open-minded, you invite also externals to join, and in order to make it happen. So I think with this community concept and a one brand strategy, this is not that easy to copy because believe me, you have to drill down local kingdoms with this. Everybody of us has to have his ego under control when you turn to such a concept. Because this is really agile. This is across hierarchies and this is across countries and it goes out of the normal org setup. But I think we have here put prerequisites in place you cannot copy the way how we approach it. Now let me fade into some of these key strategic initiatives per business model. Just briefly, also here retail. If you have the retail perspective, you see that we have a perfect distribution mix, but also that we have a perfect and very diversified business composition. And when we look to the distribution mix, you see that the direct business is still 1 digit. But if I want to highlight Poland, for instance, where in retail, direct business nowadays accounts already for 30%, 30, we have a treasure in our group we can leverage. And how we would like to leverage that we really turn from a multi-channel setup to a real omni-channel setup, where the customer experience is really seamless across the distribution channels. We have the prerequisites in place. One of the prerequisites is that you have pricing excellence. I think with the figures I've shown in Poland, you have seen definitely we are here really state of the art when it comes into individual pricing. Second thing is you also require processes and the digital enablers behind in order to follow your customers seamless across these channels. Also, this is in place in Poland. And this is why we think with this omni-channel approach, we will make a next step forward to customer centricity, because ultimately it should be the customer who decides where and what he buys. This is turning away from a distribution-centric approach to really a customer-centric approach. Next topic, corporate business. Corporate business, I think also here, this mantra of being diversified is really justified in this customer segment. You see here that small, medium enterprises account for more than 60% of our overall book. So UNIQA is not focused on big tickets. We are not playing casino there. This is very sustainable, very diversified corporate portfolio. And on the right-hand top, you see that we started this journey basically a little bit more than 10 years ago. In the early days, UNIQA was a pure retail insurer in Central Eastern Europe. Meanwhile, we grow over a decade a book up to 1.2 billion euros. And how we did it? Because we were not focusing on big tickets only. We were also running the small and medium enterprises. And also from a customer perspective, we look to it in a different way. We are not insuring only your premises, your operations. We are also insuring your employees. So the employee benefit program within our corporate book is a very important one. And you see here that we have even a significant share of health in our portfolio. This is because we are running with our corporate clients also employee benefit schemes for their employees. And we even diversify further when we sit together with our corporate customers and we think about embedded insurance, affinity business, integrated solutions for their clients, where we can make business together. So you see, this is really a success story also in this customer-centric channel. What is very important, the SME, I named it as a key strategic initiative. And you see here, the growth was 100 million euros. Yeah? 100 million euros, which are embedded in our business plans at a return on sales north of 10%. And we would like to grow further. So also this shows you how diversified we are. Last but not least, bank insurance is our third customer-centric model. Also here you see, different to Austria, the share of Raiffeisen Bank International in our overall book is now at a range of 56, 57%. Yeah? This is due to the fact that Raiffeisen has withdrawn from certain markets, like Poland, like Bulgaria, that we have withdrawn from Russia, as explained also by Andreas at the beginning. But it also shows that we managed to build other key strategic partnerships throughout the region. Of course, one we acquired with mBank in Poland, a very digitized bank insurance model, where we also benefit with all the know-how in order to spread this over to our entire ambition in this segment. The second thing is with Addiko. We have a partnership throughout Southeastern Europe. And you see also these bank partnerships, these guarantee that we will have a steady growth. We have roughly, Andreas, we were talking yesterday how many branches we have. We have roughly 1,550 branches only with these three key partners, yeah, throughout the entire region. Nevertheless, we have to be aware that only a fraction of our customers really want to join branches when they interact with banks. And this is also something we already see in our portfolio and what we are actively driving. So the share of the non-tied business, which is not directly linked to bank products, is also constantly increasing. The non-tied business, which is not linked, for instance, of the ability to grant loans. And we are leveraging on that as well with our really diversified business composition. And already in the new business, nowadays, 50% is already direct business, where we provide simple, transparent, standardized products to our bank partners. Now to summarize, the international key messages. I already mentioned we have a very diverse base. Yeah? We have a very well diversified business portfolio, but as well country portfolio, which we reshaped and set up in a perfect way. I think we are positioned in a perfect way in order to leverage this convergence we see in the already fast-growing CE markets. It is mentioned here that we aim for the upcoming years for a CAGR of 8%. Very important to mention, we aim to outgrow the market CAGR by 2 percentage points. And this is also very important. So if the market growth is exceeding our expectations, then the clear aim of us is to put another 2 percentage points on top of these exceeding expectations. Yeah? And Kurt mentioned it before, the international business is meanwhile a strong contributor to the group-wide profit, and we expect, taking this track record into account, that this will grow in the near future. What does it mean in concrete facts and figures? CAGR 8% I already mentioned. The P&C combined ratio, we would like to keep on this excellent level. Yeah? of 85, 86%. I think this is already a tremendous achievement. The admin cost ratio, we would like to bring down to 14% across the CE region, which is a further improvement of 2 percentage points. So a lot of things have already been achieved thanks to the integration of AXA, thanks to the SCE integration. We are running such a program, a cost improvement program of the admin costs as well in Hungary, for instance, nowadays, whereas we discussed yesterday, we would like to offset and counterbalance the tax burden, which was granted to us by the Hungarian government. And if you look to our life book, we would like to see a sustainability ratio of 100%. We are already nowadays north of 90%. That's all. Thanks for your attention. I think it is now planned that we have a short break. Yeah. And then I will hand over back after the break to Kurt, I think. 10 to 11. Thanks a lot.
Welcome back. Yeah, as Andreas said already, Peter Hummer is in a sickness leave, and therefore I will talk about Austria, the optimize of profitability. Setting the scene to Austria. So UNIQA Austria at a glance, we have around 4.3 billion on gross written premium in the whole market, which I will tackle in a moment. We are serving around 3.7 million customers. For all of you, Austria is a country with around 9 million on inhabitants, so that means close to 40% of the Austrian market we are covering in that case. We run the business in over 400 locations in Austria. That's insofar of importance because we are a regional but also digital insurance company in Austria. And this is also a USP of the Austrian entity. We have around 6,000 employees that we have on the spot in that case. We have to divide them, and this is also the topic of later, but here we can say our sales force in Austrian is twofold. Besides broker and online, we have the so-called tied agents concept, which is around 1,000 people in Austria from Vorarlberg to Burgenland. And we have around 1,400 self-employed agents and self-employed sales staff that is working for UNIQA. So power of 2,400 people in Austria serving 3.7 million customers. Austria itself, on the right-hand side, the country was in a recession 2 years, now coming back slowly. You know about the situation on the industrial situation in Austria, so a little bit of less economic growth, but on the other hand, a high economic growth in the service industry, in the tourist industry, hotellery, financial institutions, so that's the backbone of Austria, and that's also the rebound and the GDP growth we expect in the future in Austria. The insurance market in Austria, we have around more than 40 insurance companies running insurance in Austria. The market is covered, 70% of the market is covered by the top 4 insurance companies, which is stated here, and UNIQA is among them. That means 4 insurance companies running the 17% of the market. The market itself is very mature. We expect a growth of around 3%. UNIQA Austria is within this 3%, which we expect, but where we are ahead of the market, and this is what I will elaborate in a minute, is in the area of P&C and in health. Insurance penetration is of about 2,200 euros, for example, and the insurance density is about 4.2 percentage points in Austria, also to set the scene in that case. So a very mature market comparable to Germany, Austria, France, etc. UNIQA Austria is in a leading health position in the country, and this is also the key enabler for growth. But before we come to that, let's have a look on the right-hand side of this picture, where we see this regionality of us. So we are number 1 in more or less of all the federal counties of Austria. We are not in the leading position in Vienna. This has historical roots, but especially in the urban area and in the counties, we are number 1. Leading position on the health side with more than 44% on market share, P&C, and in life, number 2. And looking at this picture and also on the regional setup. That's the reason why we stick to these 400 locations that we have in the country, because this is where we can serve the customer. This is where we are close to the customer, no matter if we talk about omnichannel, digital, and this is one of the USP that we can cover the whole country from this perspective. If you look on the market, left-hand side, so the market is structured in a way that around 65% is P&C in Austria. Differently, UNIQA, because of our leading position in the health business, we have 50% of P&C, we run around 30% on health, and we run around 20% in the life. And exactly that will change under UNIQA 3.0 growing impact. The impact of the health book is growing, and this growth leads also to a different share of the health business in 2028, 35% of UNIQA's portfolio. How we do this, I will elaborate in a minute, but also René, responsible for the health business, will talk on that health. Another thing is known is differently to Wolfgang's section, where he talked about international and the strong growth in corporate and the huge development that took place in the international business. It's differently in Austria because Austria is retail driven. 2.2 billion, that means a little bit more than half of the portfolio of Austria is retail driven. And also here, the link back why there's regionality is so important for us. Corporate is also important, but for us, the share is a little bit lower, but corporate is a portfolio which is under restructuring case in Austria. Therefore, we on purpose do not get this big growth, but on the other hand, we grow in the earnings in respect to previous years. And not to forget the bank channels. Andreas talked about the partnership with Raiffeisen, the bank assurance, the bank channel for us of high importance, especially of the personal lines, and also the regionality in Austria. So far, setting the scenes. We have in Austria, also this is important, talking about the strategy of Austria, more or less all sales channels that are available. Of course, 50% because of the tied agents concept is of high importance, also for retail business. But when we talk about omnichannel, which is one of the most attractive topics in the new strategy, it's important that we have also to have in mind that we're serving with digital, with brokers, with other and bank assurance, these 3.7 million customers in Austria. Also here, same story like international. The digital area, the online area in Austria is limited, so the 2% is not only an UNIQA topic, it's a topic of the market. We are a little bit in a situation where people inform online, buy offline, but I think and we think that this trend will change in the future, and therefore we have also be ready for this digital area. The 2% have to grow and will grow also in our strategy. So that's so far setting the scene of UNIQA Austria. Same as you saw in the international segment and section, it's also the strategic house of UNIQA Austria to be mentioned. And here we have the same structure as Wolfgang explained. So when we talk about our organizational setup, the same setup that you have heard in the international business is also valid for Austria. That means we have also here the end-to-end process. We have the retail, we have the corporate, and we have the bank. So also in that case, we have no chief sales officer. We have no chief insurance officer in UNIQA Austria. It's the same structure as you have heard in Wolfgang, because this brings us then to the synergies that we can take out of the international business and of the Austrian business in terms of pricing, for example, in terms of creating products, in terms of IT, and this is the so-called target operating model that leads the group to this new setup of this end-to-end responsibility. Different strategic ambitions. Here we talk in the retail business, and I will talk about a lot on omnichannel strategy, because this is the new way of how we want to serve our customers and also gather new ones. The second thing is growing in health, is a topic from René afterwards. Corporate, we talk about the restructuring case in Austria. Why that? I will tell you about this. And then we have the bank assurance with the topic of increasing distribution power. You've heard of Andreas, around 300 points of sales. And these 300 points of sales are also customers, not only for Raiffeisen, these are also customers for us. And this is where we want to have a little bit more, especially on the product integration between life and health in that respect. Vertical integration, which you see on the right-hand side, is an issue in Austria which is growing. What stands behind? Two examples maybe that give you a flavor. We are working together with the biggest Austrian automotive club, where we sell P&C insurance. So this is a vertical integration because there are maybe also UNIQA clients there, but there are also clients from other insurance companies. But the P&C side and a little bit of health is something where we have a different approach and where we get access to new customers. So this is one example. Another example is there's a big Austrian optician chain where we have health products on a very low level, but with a high volume. And in that case, vertical integration takes also place. Then we have the leasing companies. So think that you have a little bit of an overview what is meant behind vertical integration, because this is also a growing field for us in the future. The health and P&C business drives the future on growth. If you look on this chart, I think what jumps into the eyes that in life, which is the upper side of the bars, in life we're losing volume. Yes, that's right. Why is that the case? That's the case because UNIQA has sold a lot of single premium products, a lot of products on life side in the 10, 15 years ago. These have been the times with the high interest rates, with the high guarantees, or the bank channel, and these products and this portfolio is now expiring. And it is much more expiring than the new business that comes in, and this is the reason why we in that case have a premium development which is lower than the 9 months as a basis. But this is for us okay, this is for us key, because when you remember what I talked about in terms of profitability, in terms of what for us is key that the new business in life is very positive, is very attractive. For us it's key that the life business is following our in-force book that we managed the last couple of years, and therefore less is more in terms of profitability. In that case is for us key. The top line is because of the maturing portfolio in that way that we are losing volume in that case. But on the other hand, if you look on the P&C side and if you look on the health side in Austria, we are growing. We are growing more than 5% on a CAGR. So and this is for us the key growth in Austria. And when you talk about, let's start with P&C, we have one field of action that we say, okay, here we want to grow explicitly more in the future, and that's the so-called small medium enterprise business, SME. So it's part of corporate. You've seen it before in the pie chart, but it's a business that you can imagine of up to 50 people in a company and of a revenue volume of around 10 million euros. So that's the definition of SME in Austria. To set the scene in Austria, because Austria is a country where we have, and that's very important, a market of more than 700,000 SME corporations in the country. We have in that field more than 2 million employees in Austria. And these 700,000 SMEs are producing a revenue of around 350 million euros. And that's for us a key field where we want to grow. Where we want to grow about 70% in the future, where we want to have at least then in 2028 a volume of around 350 to 400 millions on premium. And this is for us one field of action where we want to grow in the P&C side. Health side, just wanted to tackle here 5%, more to come then from René, but this leads then to the overall growth in Austria by 3%. And then we have the legacy book of the life portfolio, which are tackled so far. When we talk about P&C growth, we also have to talk about, okay, profitability on the P&C side. And one part that pays in the 1 percentage points improvement of the attritional claims, I talked in my finance and risk sections. One part that pays in is the development of the P&C loss ratio in Austria, which improves in our strategic program by 5.5% in the future. So how does this work? This works on the one hand that from a starting point of Q3 2024, we have new pricing levels that we set in Austria for the next 4 years. A, it's about dynamic pricing. B, it's about learning from the international business how we can use data and with this case also adapt on a very quick level the pricing systems, where we can also use NatCat Center, and in that case also improve the risk management in that case. And this one part where with underwriting and where with different pricing levels, we want to improve the P&C loss ratio in Austria. Second part is the business mix on SME. I talked about this, the level of new business, which is profitable and also pays in a reduction of the P&C loss ratio. Third thing is the restructuring of the corporate business. Why that? Austria has a legacy that we have been, especially historical-wise, very prominent in corporate business liability, for example, and within the liability in the transport insurance, but also on the hospital insurance and liabilities. This has nothing to do with that what you have heard by Andreas in terms of that we are running private hospitals. That's a different story. This has nothing to do with this. We talk about here that we have been insurer of hospitals in Austria, public hospitals, private hospitals, other ones. And this portfolio was, on the one hand, very huge, but on the other hand, very, very unprofitable. So we talk about here on loss ratios more than 300%. We talk about here a volume of more than 200 million euros. And this is what we started even in UNIQA 3.0 in the existing strategic program to sanitate and to restructure. And the first attempts you see in the first signs, you see in the balance sheet 2024. So I can tell you that we stepped back from around 50% of the portfolio. And this led to a premium decrease, of course, but to a profit increase. So the loss ratio from the 300% I told you is at the moment of around 98%. We want and we expect that this portfolio turns over in the strategic period up to 2028 to 40%. So that means on a level between starting point and end, the 10 years, we want to have an average a loss ratio of 40%. And this brings then also the loss ratio down, the profitability up, but yes, we have in that case less premiums to expect in the future. Next point that pays in an improvement on the loss ratio is the improvement on the claims management. So what's behind this? In that case, Austria, very mature, I think, but what we have not so far, and this is the part of UNIQA 3.0 growing impact, is about using more digital elements in the claims management, using AI, using different fraud management adaptations, work on recourses, and this also pays in the improvement of the P&C loss ratio in Austria. So this is a little bit the walk from 68.8 down to 64% on loss ratio Austria by a high growth of around 5%. IT is an enabler for us. We started IT program 2017, and I think you know the story about that. We are at the moment not at the end. I think everybody knows that by investing in IT is not a topic you start and then you have an end, especially in days like these when we want to become more digital. In days like these when we want to serve the customer on all levels that are important for him, we have also to invest in the IT. But IT is not only an investment in terms of having better tools and better systems. IT is also a topic that it's for us a enabler for other things. So when we talk about IFRS 17, the accounting, so in that case also here we have better data quality than we had in the past. When we talk about broker platforms to serve also our sales channels in that case, so it is also the investments we have to take because otherwise they cannot work for us. To invest in the IT means also that our customer has a different experience with us than in the history, and therefore this enablement is important. Last but not least, to be also on the security side level, cloud system, different security systems. Also this is important for us to cover with the new IT strategy. And this pays in a transformation, in a digital transformation, and you can read out on the right-hand side what this means. So efficiency programs, which leads then to the improvement on the cost side, are, for example, that we are reducing our policy lines from 2020, 120 to 20 in 2028. So that means the simplification of products, means also a simplification in the claims management, means also a simplification for our clients, and not to have a widespread of products which has then a huge administration and backload, and this is very cost intense. Other thing I would like to point out is that we are using with this an AI-based sales support through optimized customer offering. So that means also our sales force is getting new data, is getting new information to have a different view on the customer than in the history. So this is the digital transformation I'm talking about. Omnichannel, that was a keyword I took some minutes ago. What does omnichannel mean for us? Omnichannel means, because, again, setting the scene, we are regional in Austria. Omnichannel means that in the future, the customer should have the right and the position to buy UNIQA product where he or she wants, and not like we tell him to do. So that means it doesn't matter if he buys this topic online, the products. It doesn't matter he wants to go to a tied agent or he wants to go to a broker. It's a decision of the client how to use the UNIQA products. And we have to be ready to make this hybrid. So it can also happen that the motor business is bought online, the health insurance via the tied agents, and maybe the other thing is done bought via a platform of accelerator. Yes, this is exactly what we want, and this is the right for the customers in the future, because with this we expect a growth, again, in health and in P&C. My UNIQA app is a solution which should support our clients in that respect. So that means, okay, also these self-services for our clients, that he or she can do things that you can read out here on the right-hand side whenever they want, and not wait until the UNIQA regional office is open. So that we have also here the possibility of client satisfaction, but on the other hand also have efficiency efforts that bring down our administration costs in UNIQA Austria, which is also a key element for the profitability. And this app store, or this app that is already running, for example, by invoicing of health services or on claims management, is ranked very high in Austria. So at the moment we are under the financial industry apps 4.6 stars out of 5. I think quite a good feedback that we get from our customers, but we want to have more in that case in 2028, so it means a density of 50% from all our customers from the 3.7 I mentioned before. Administration cost in Austria, I mentioned it several times, 1 percentage points from a level of 40% down to 30%, coming from the topics I explained before. That means more efficiency, more digital, and also IT topics that bought a buy-in. On the other hand, we will also invest again. So the IT is not over, as said, so the 200 million we expect in the future are embedded in that case. So that means on the one hand investment, on the other hand also an improvement on our admin side. How this comes, but also in that case, we are ramping down the infrastructure FTEs in IT of around 400 until 2028. So that means also these personal costs are reducing and paying in the improvement of the administration costs in Austria. So this is the efficiency program that pays in the profitability of UNIQA. So key messages in that respect for UNIQA Austria. We have a strong position which we want to keep, and where we want also to extend this, especially in the health business, where we have the leading position. The regionality is one of the USP of the company and is also one topic we want to keep. So we are not shutting down one of the so-called regional offices. We are not running the business out of Vienna or of Graz or Salzburg. We are doing this in each federal county in Austria because we want to serve the customer on the spot. Profitability enhancement is coming from pricing improvements. It's coming from the topic of SME explained. It's topic about from strategic claims management and the omnichannel approach that I explained to you. And the big IT transformation, which is not over, but a great step is done. So the life book is already implemented. The P&C book is more or less done. Health book is the next step, and therefore the investments I talked about. But on the other hand, also the efficiency and the administrational cost reduction is part of this investment. So it's not only an investment program, it's also an efficiency program that stands behind. Leading to the KPIs of UNIQA Austria, which is 3% CAGR because of the life book, again, which is not that growing, but strong growth in P&C and in health side. A gross combined ratio below 91% in that case, so very excellent also on that level, not that excellent as an international business because of mature market and different historical roots, but 90% as a key on the growth side. The cost ratio on the admin side of around lower than 13%. This is the improvement of 1% in the future. And a CSM sustainability ratio higher than 85%. So also here, differently than in the international book, we have a very profitable CSM business in the health book. We have the topic in the life book because of the historical roots, because of the guarantees, and also because of the missing portfolio, which is not that high as it was 10 to 15 years ago. So this was my tour with you together to UNIQA Austria and the strategic ambition of UNIQA Austria, and to close the circle of the strategic program of UNIQA. And René gives you a deep dive in the next sections. Thank you.
Thank you, Kurt. I will now take you all to the next chapter, elaborating on our growth opportunities we see and the ambitions we have set to the life and health business of UNIQA Group. In addition, I will also add some information in the end on insights on our approach on ESG before handing back to Andreas again for some closing remarks. Before we step into all the details of the life and health business, we want to underline that for our both markets, the Austrian market as well as the CE market, the business segment, life and health, is a core segment also in the future. And we want to underline this with two trends we see. I think well known on one hand side, aging population. So you can see if we read the latest report published by the European Commission, the Aging Report 2024, we do see a continuous trend of increase in life expectancy. It will increase up to 90 years until the year 2070. And as at the same time, pension reforms are progressing rather slow, we will see a significant increase in the time span people will spend at retirement age, which will bring public state pensions under pressure. This pressure on the public state pension schemes will also increase the demand on the private side. So we'll see that individuals will need to also save and invest for their retirement. And we see also a growth opportunity here, of course, for insurance products providing a proper service to our clients. That's one point. Second point, looking on the Austrian market, if you look to the just recent 3 years, we do see a relevant growth in private healthcare costs. They're increasing in absolute terms, but also in relative terms of total healthcare costs. So we also see here that people tend to spend more out of pocket for taking care about the health, which is another growth opportunity for us. So for both areas, we do believe we need to provide compelling insurance products also in the future. And therefore, we do believe that having offerings for our customers in both regions will be relevant for the future of the group. We've heard in the recent chapters that we have achieved over the recent years a very good diversification of our portfolio. Especially in a low yield environment, we have been able to grow and grow in a profitable way our P&C book. And looking forward to the future, we also need to ensure that we will grow and also do it in a profitable way on the life and health segment. By today, in terms of revenue, life and health is amounting up to 40% of the total revenue of the group and contributing roughly 50% of the profit. Stepping first into the life segment, you already heard some insights from Wolfgang and Kurt. We need to underline that it's about improving profitability in the upcoming years, and you will see a twofold picture, quite different between the Austrian market and the international market. Speaking first about the in-force book, and stepping first into the Austrian business, we currently have a portfolio of roughly 900 million gross written premium, still dominated on the Austrian market by traditional life and unit-linked products, so not that strong in protection business. And we will see a further decline in upcoming years down to a level of roughly 800 million euro GWP. We will stabilize on this level. Nevertheless, there is a decline in the upcoming years. What is important to know, the average guaranteed interest rate is decreasing over years. There will be a deep dive in a second. But very important, we have a very strong contractual service margin. So the indicator for future profits out of this portfolio is very strong. The CSM amounts up to 1.4 billion euro, and we have an annual release of roughly 6% per year. So we will also see in the future significant profit contribution coming from the life segment. The story on the international side is different. In a positive way, we see a strong growing book already in the recent years. We will see even more significant growth in the upcoming years. And most importantly, we do run a business here which is highly contributing from protection business. That means we have currently roughly 60% in our product mix is coming from protection business, which is low capital incentive products providing high margins, which is also an indicator for the future. The contractual service margin is currently €500 million with a much stronger and faster release. So we also see a release of roughly 100 million CSM release per year, which means roughly 20% of the CSM are recognized as a profit on a year-by-year basis. If we combine both segments, important to know is that for the first time after a couple of decades, we see that the international book will outgrow the Austrian book. And we will also see that the protection business is gaining a relevant stake across the entire group, ensuring also profitable growth in the future. Having a short insight to the Austrian book, because for many years the Austrian life business was dominating the life segment of the group and traditional life was dominating this life segment of the group. We've provided here a short overview for you for time series of the recent years, the development of our actuarial reserves. You can see a decline over the last decade. We will also see a decline in the upcoming years. So we're currently on a level of roughly €8 billion of reserves, which will decline down to 7 billion in the year 2030, and we will see a continuous decrease of the average guaranteed interest rate. Being now again in a situation where we have increased interest rates, we've also plotted here the risk-free euro swap rates with a 10-year tenor. You see that also we will be able again from an investment return to outperform our average guaranteed interest rate, which will also contribute to positive margins in the future. Thanks to decreasing the traditional life book, we will also see a bit of a release on the capital side. So our risk capital based on Solvency II will reduce on the Austrian market. We will need this reduction in risk capital to further grow the international book. Speaking about the new business, starting again with Austria first, you see that currently from a portfolio mix, traditional life is getting reduced in the new business. Nevertheless, protection business is not fast growing. What we do see is that we will be able, thanks to more new business volume in the future, to increase the new business value up to a level of 30 million. We will see a contractual service margin sustainability ratio of roughly 40%. That means the overall contractual service margin on the Austrian book will a bit decrease over the upcoming years. Nevertheless, we're working hard to improve this CSM sustainability ratio, and we will at least reach a level of 40% on the Austrian market. The national business, we do see a very favorable business mix, a very high portion of protection business. We have seen before on the in-force book already roughly 60%, on the new business roughly 70%, further growing in the future. We see a very strong new business value at the level of 115 million up to 2028. And as Wolfgang already mentioned, the sustainability ratio, so the indicator if we're able to keep the CSM on a higher level, will turn to 100%, which means a very strong indicator for the future. Again, if you combine both sides, very important to see is that already by today, 2/3 of our new business volumes are coming from the international market, which means also the business mix driven by the strong growth international side will improve further with this growing protection business, less capital incentive, high profit margins. And overall, if you combine Austria and international business, the contractual service margin will be on a level of roughly 70% in the upcoming period. A short deep dive to our product offerings throughout the markets. First, having a short insight on a traditional life product, because it's still quite a demand on the Austrian customer side, especially driven by our sales partner Raiffeisen Bank. So therefore, a short insight to the traditional life product. You see, if you look on the bottom line, it's amounting up to roughly 14% of new business volume. So it's getting less and less important in the overall new business production. And then meanwhile, we can have a strong new business margin of roughly 5%. We have reached this increase in new business margin by making some technical adjustments to the products. We make it less capital intensive with the key fact that we've reduced the guaranteed interest rate down to 0%. At the same time, and that's true for all product lines, we increase the customer value. So we provide a lot of flexibility to our customers and also made a more modular approach to these kind of products. Even more important, unit-linked business. It's a growing part of the new business in all areas, in Austria as well as in the international markets. The most relevant change in the recent years was that we have reduced significantly the amount of funds we're offering, and at the same time, we are stronger using our own asset management companies in Austria, in Czech, and in Poland to offer UNIQA funds within the unit-linked business, which is increasing our margins. Also in this business, we do currently see a new business margin of roughly 5%, and this business amounts to, in the meanwhile, already 30% of total new business volumes. Last but not least, the most relevant part of the new business is currently the protection business, amounting almost to 50% of our new business production, providing very high margins, the level of almost 20%. Before I summarize already on the life insurance business, we want to highlight one more point because it's very important in terms of future diversification of the business. It's our pension and savings business. We've acquired through the AXA acquisition in 2020 in the countries Poland, Czech and Slovakia pension business. It amounts to up to roughly 10 billion euro. It's growing year by year. It will also grow in the future. And this business is important for us due to 2 or 3 reasons. One reason is in terms of diversification. With also these capabilities, we were able to enter the savings business. So if we also do look at the demand from customers, we do see that they are saving for their pension. They do this through insurance, but also through pure saving products. With the capabilities acquired here, we for the first time are also providing pure savings products, currently mainly in Czechia, but we will roll this out to other countries. So a higher diversification of our product offering. That's one point. Second point, this kind of business is low risk intensive, which means comparable to unit-linked business. We do not need a significant amount of risk capital to cover this business. At the same time, we're earning quite strong management fees. So overall, another step of diversification of our product offering. You can see the volumes, especially on the pension business, are quite significant in the meanwhile. There's a strong profit contribution from this kind of business. Summarizing on life, 4 key messages. Message number 1, as mentioned in the very beginning, we see the aging society as a strong structural driver of the business in the future. We do have a twofold situation between the Austrian market, where we're still declining the portfolio, and the international market, where we're increasing the portfolio. Overall, we will increase the portfolio to a level of roughly 1.8 billion euro, having a CAGR growth of roughly 3% until 2028. Second, on the insurance business, we work hard to further improve the diversification of the product mix. We will see, thanks to the international growth, protection business is becoming more important. We will become less capital intensive on the life insurance business, and we will increase our CSM, sustainability ratio, to the level of roughly 70%. Third message, very important, also in terms of diversification, we're not only having on the insurance side an improved diversification, we also will soon see improvements outside insurance through our pension savings business, which is capital light and providing significant management fee income. Fourth message, not mentioned yet, we are finalizing 2025 a multi-year IT transformation project, having the final migration parts in spring next year. Thanks to this, we will also be able, through the life segment, to contribute to the overall group ambition to decrease the group admin ratio. And as well, we are freeing up resources, having again the ability to also work on product improvements and product innovations, especially on the Austrian market. That's it on the life insurance business. Giving an insight now to our health insurance business. Comparable to life insurance, we are already very profitable on the health insurance business by today in both segments. We will see this in a minute, but we do see huge growth opportunities in both markets, and we will elaborate on this in the upcoming slides. Starting first again with a look to the in-force business and starting on the Austrian market. As mentioned by Andreas and Kurt, we are the undisputed market leader, having a market share of 44%, which is translated to a gross written premium of currently 1.3 billion euro on the Austrian market. You see in terms of product mix, we have like 2 core products. One product is outpatient products, the other one is inpatient products. Inpatient products was the starting point of health insurance in Austria, meaning we're covering medical expenses at the hospital. Outpatient products, we're covering medical expenses on the private doctor market, for example. You see that the inpatient business currently is still dominating, so it's roughly 2/3 of the business by today, and it's a very profitable core of our business. We saw in the recent years a strong growth in the business, also driven by medical inflation. You will also see in 2024 another strong growth in this business field, but also in the future, we can provide you today the insight that with the strong belief that the business will grow also in the future, because we have a huge market potential on the Austrian market, especially in the outpatient product world. We will come to this in a second. In terms of profitability, you see an extraordinary high contractual service margin amounting up to 3.4 billion euro. That means this huge profitability out of the health business is also parked on the contractual service margin with a rather low release. So we have roughly a release of 3% of CSM year by year, which means it's a very long duration business, but also ensuring very long profitable profit recognition in the upcoming years. That's on the Austrian book. On the international book, in terms of size, it's currently not significant to the overall portfolio, not for the international segment, not for the group in total. Nevertheless, there is strong growth. We have currently on a level of a GVP of roughly 120 million euro, and we will do see significant growth in the future. In comparison to the Austrian business, the international business is a short-term business. We're speaking here about one-year contracts. Therefore, also the profitability measure is expressed in a combined ratio, where we are currently on an excellent level of roughly 80%, and we also are convinced that we can keep this excellent combined ratio level in the future, which means despite we have a rather small portfolio here on the international side, it will be an even more relevant profit contributor in the future. We want to deep dive, because it was mentioned before 2 or 3 times, we are #1 on the health insurance market in Austria. Therefore, first a comment, how is the market working in general? So the public health system is covering all the basic healthcare needs of the people in Austria, and the private insurance is an add-on for 2 reasons. We grant preferential access to hospitals and to private doctors, and we also add supplemental services. Very important to understand is we do offer lifelong contracts. So usually once a customer gets contracted with us, he stays for the whole lifespan. And very important in comparison to life insurance business, we do have annual premium adjustments. That means in terms of any kind of adverse claims developments, increase of inflation, we have the ability to adjust the premiums on a year-by-year basis, which is also granting us profitability despite we having here very long duration business. Market share is 44%, double that compared to our second competitor, so really strong position on the market. And we have 3 main competitive advantages where we are really, in some areas, the only one providing these offers to our clients. Number 1, we have built over the recent years an outpatient healthcare platform. So we have an own network mainly consisting of private doctors, currently roughly 500 private doctors, which is a penetration of 7% of all private doctors on the market. And through this outpatient healthcare partner platform, we can provide preferential access to our clients, to private doctors. Point number 1. Point number 2, we do own inpatient infrastructure. So we're the largest provider of private hospitals on the Austrian market, having a market share of roughly 35%. In the capital Vienna, even above 50%. That means we also do benefit and participate on benefit payments in the health insurance and also in the accident insurance, which means along the value chain, we have another revenue and also profit source out of this business. Third, we've launched in recent years a so-called urgent care service. So we're the only provider in Austria which is able to provide quick care services at off-peak times, in the weekends, at nights. It's a core differentiation factor in comparison to other competitors on the market. And our customers can use this service in private clinics where they have no waiting times and direct billing. We also want to emphasize very briefly that we, being #1 on the Austrian market, try to enrich our services within the existing health ecosystem. So we have founded a corporate startup back in 2020, which is currently operating under the brand Mavi. The one hand side, we've bundled all our current outpatient and inpatient infrastructure with this organization unit. At the same time, we're entering new fields of activities. We have currently 4 fields of activities we have stepped into. One is the area of home tests. Second is the area of employee assistance programs, so for corporate customers serving their employees. The third one, already mentioned by Andreas, is care at home. And the fourth one, which I stepped into last year, is the offer of telemedicine, where we acquired a major stake in Telemedi, the Polish leading company providing telemedicine services. All 4 areas are areas where we do see high customer demand, where we do see growing markets, and where there's a relevant part of the value chain that can be digitized, which means we can scale the business in the future in a very efficient way. That's somehow the common denominator of these 4 areas. And we have a quite significant growth on these areas. It's by the small overall, but we see a 40% year-on-year growth in revenue over 2024 so far. Having said so, the clear ambition is to enrich the health ecosystem. On the one hand side, to have a clear differentiator also in the future for our health insurance customers. On the other hand side, again, as mentioned in several other aspects today, we want to increase diversification of revenue and profit, and therefore we will keep on investing in this area as well. Why do we believe there is significant growth on the Austrian health insurance market? If we look to the spendings, out-of-pocket spendings on private healthcare, we do see spendings in the year 2023 on the level of roughly 11 billion euros. If we decompose this 11 billion euros, we do see one relevant part, roughly 3 billion in inpatient healthcare expenditures, and even 2/3, 6.6 billion euros in outpatient healthcare expenditures. If we look first to the inpatient market, which was the starting point of private health insurance in Austria, we do already see by today a good penetration. Yeah? So out of these 3 billion spendings in 2023, roughly 34% were covered through insurance coverages. If you look to the outpatient market, the situation is very different. So we see 6.6 million spendings. Half of it is roughly private doctors market, but we only see a penetration of 9%. We see the penetration is increasing over the recent years, and we do have the strong belief, and we do see a trend here on the Austrian market in recent years, and if you speak to experts, we are very convinced that this penetration will increase up to 20–25% in the next decade. We are not aware, or we're not sure about the speed of the convergence, but there will be convergence. And simply, if there is convergence, we want to be part of it, and we also want to grow our outpatient business in significant terms in the upcoming years. So we see a huge uncovered potential on the health insurance market, and therefore we believe we will see significant growth on health insurance on the Austrian market. To give you one practical example, we see in the recent years in the Austrian market also increase of private medical supply. We have picked the example of the development of the doctors market. So you see on the one hand side, the gray line, the public contracted doctors, which stayed over the recent 20 years almost unchanged on a level of 8,000 doctors. If you look to the private doctors market, we see a huge increase over the last 20 years. And the key message here is that whenever there is growth on medical supply, there's also growth on insurance coverages. So you see here also in the chart below, if you look to our outpatient product and the number of contracts, the number of tariffs provided here, we see almost at the same magnitude the increase of our product offering as the magnitude of the growth in the medical supply. One point is very important if you speak about growing the business in the future, because if there's this huge growth, especially on the outpatient market, we have to be sure that we are prepared for this. Therefore, digitalization is key in 2 aspects. If you look to our main customer touch points in health insurance business, they are on 2 sides. One side is when customers are submitting claims. The other side is when customers are entering a contract, the underwriting. On claim submission, everything that is done on the inpatient products is highly automatized. There's direct reimbursement between hospitals and insurance companies. On the outpatient market, of course not. What we've implemented here over the recent years is a very strong application, web-based and also app-based, where in the meanwhile 86% of all claim submission in outpatient health products are done through the app or through web portal, which means we have a very high basis for straight-through processing. Straight-through processing still needs to be increased, but is already by today on a high level of roughly 20% and will be increased in the future. Important message, what we've built also with a growing portfolio, with the capabilities to do this in a very digital way, meaning we can also increase this on a very cost-efficient basis. We've also worked very hard in the recent years and launched it this year on automated underwriting. Our high profitability in the Austrian market is also linked to an excellent underwriting quality we can provide with a strong network of underwriters and medical doctors. We are trying and improving stepwise also this in an automated way. We've launched in February an in-house built underwriting tool, and in the meanwhile, 66% of all underwriting decisions are done automated at the same quality level it has been before by underwriters or private doctors directly. So we are well positioned on underwriting and on claim submission to grow the portfolio in the future. Summarizing on the new business, we will see a very significant development here in the upcoming years. So our new business value, which is currently on a level of roughly 100 million, will increase by almost 50% up to 150 million euro. And even more important, again, this core KPI, the CSM sustainability ratio, will exceed 100%, up to a level of 150%, which means we are increasing the contractual service margin stepwise over the upcoming years, ensuring on a very long duration, strong profitability also in the future out of this segment. Another comment we wanted to make is, of course, if you want to grow the portfolio, it's important how is the lapse behavior of our customers. Therefore, we have provided on the right-hand side a time series of lapse rates over the recent years and decades, so dating back to 2011. What we see is that we have very low lapse rates in general and even decreasing lapse rates over the last 15 years. The reason is because in this health insurance business, we are building so-called aging reserves, and they are non-transferable. So whenever someone enters a contract with a private health insurance company, it's not easy for him or her to leave the company again, or it would be possible, but the client, the customer, would lose the aging reserve built for many, many years with the contracted insurance company. Summarizing on health, 4 key messages. Message number 1, to underline again, we are the number 1 on the Austrian health insurance market, which brings us into an excellent position. If the market is growing in the speed we expect to grow it, that we are in the best position to grow in line with the market. Second one, we have a very strong preferred provider organization on both areas, the inpatient area and the outpatient area. We will grow this infrastructure in the future and therefore also provide our customers an excellent customer experience within the upcoming years. We will do all this in a very automated way, as just shown before, on the underwriting side as well on the claim submission side, which will result in a very high straight-through processing rate. So despite we will see strong growth on the markets, we will be able to handle this growth in the upcoming years thanks to high automation. This results in a very strong growth story driven by the Austrian health insurance business. So we do see a CAGR of roughly 5%, growing the portfolio to up to 1.8 billion euro until 2028, reaching this very high CSM sustainability ratio of 115% in the upcoming years. That's it on the health insurance business. And to conclude, before handing over to Andreas, a few insights to our approach on ESG. Let me first state that we see ESG as an integral part of our business activities. So we've integrated ESG capabilities to all areas of our organization, to our own operations, to underwriting, to investments. And we have very early also set our ambition. We do believe that having a good understanding and deep insight on the outside-in risks of ESG, so how our business is affected, for example, through increasing frequency and magnitude in NatCat, but also to our inside-out impact we are creating, especially through our investments. So both sides are relevant to understand, and thanks to this good understanding of outside-in risks and inside-out impacts, we can mitigate risks on the one hand side, but also create business opportunities for us. We have set on a very early stage in 2019 our ambition, so we are fully in line with Paris climate targets, and as mentioned by Andreas, we have set the ambition to reach net zero emissions until 2050 for the entire group, and until 2040 for the Austrian market. Setting the stage for long-term ambition is one thing. To realize it step by step is another thing. So we need to ensure that we have mid-term plans over the upcoming years, 2030, 2035, to also ensure that in the end, 2040 and 2050, we will reach this high ambition. Therefore, we've entered different memberships. The 2 most important ones are the Net Zero Asset Owner Alliance, which we entered in 2021, and the Austrian Green Finance Alliance, which we entered in 2022. Thanks to these memberships, we are in the position to be more concrete on mid-term targets on ESG. on the one hand side for fossil phase out, on the other hand side also to ensure that our target setting is in line with science-based target initiative. There are a lot of different KPIs when we speak about ESG, and next year we will see through the new reporting requirements a lot of KPIs out on the market. We try to aggregate all our KPIs and put a stronger focus on ratings, on ESG ratings. Despite there's still a lot of development ongoing, we focus in the upcoming years on 2 ratings. One is Sustainalytics, the other one is Standard & Poor's ESG rating. Already by today, we are in a strong position. So if you compare our ESG ratings to our peers, we are stronger on ESG ratings already by today. And we have also a clear understanding how to improve the ratings for the future. And therefore, we also have set targets for 2028 to significantly improve also ESG ratings. We think having a focus on this, we will, on the one hand side, create more transparency also for our stakeholders in our ESG performance, but also ensure that we have a continuous improvement in this area. That's it on ESG. And having said so, I will already hand over to you, Andreas.
René, thank you. Thank you very much. 5-minute summary at the end. 2 remarks not written in my textbook. Sorry for this, guys. First, a big thank to you for your really high dedication, for your discipline, for your high degree of attention, which we could feel. It's a privilege for us, and I want to state this because 3 hours have been long now, and really could see a lot of things going on in your face. Hopefully, to get a great bunch of great questions afterwards. Second, I want to state this, guys. It's a privilege for me to work in such a team. Maybe you could feel the passion today, and not only in the board, but all of you colleagues being present here today. Without passion, nothing works in our life. And you saw maybe our track record like 3 hours ago when I showed you how development was starting from 2012 up to now in the last 11 years. Many things went on, maybe some of them not in that speedy way as we expected to be, but this passion, this dedication, this commitment to this company, was basically what we like, what I like, and what I love for, frankly spoken. And this gives us the chance also to look for opportunities and to look in an optimistic way into the future, because we see so many possibilities and chances around the insurance industry and especially around UNIQA. So not to bother you too much anymore, but just taking those 6 items on the right part of the slide. This company, and I think you heard from Wolfgang and Kurt and René, is highly diversified in its best sense. Okay, meaning maybe not even 2 legs, maybe even 3 or 4 legs, but we are not depending on the one or other source of growth or dividend or profit or stuff like this. Second, in Austria, this is a game of efficiency, a game of efficiency on a very mature home market where we expect, and this was underlined by René at the end, significant backwind by the health business. We still have the feeling we need to invest into this field, in this ecosystem, and this is item 4 here, because there's a huge demand on the market there, and we expect that this demand will also grow and expand at least to the urban centers in Eastern Europe, where the purchase pricing ability are much higher maybe than on the countryside. Item number 3 here, and you felt also the passion, Wolfgang, in your speech, what huge catch-up potential we have in Eastern Europe, driven by the macros there, driven by the catch-up potential of the markets itself, and driven, third and lastly, by our own sales force, which I think was described perfectly by Wolfgang. Having said so, and Kurt made a very clear statement on this, this company has a very robust capital position, a very strong solvency position, and I think really a great modern state-of-the-art governance. I will not repeat all the KPIs now on the left part of the slide, because I hope that you're pretty familiar with them in the meantime. Just want to say once again a big thank. We make a close here. I may ask my team to join me here on stage, and we have now 30 minutes time for your Q&A before we step into the informal part, having a hopefully nice lunch together. Thank you so much, and thank you for listening to us.